one or two people a week that are thinking of buying because they're frustrated with what they've gone through with their landlord. And sadly, from a legal standpoint, I don't know. Let me rephrase that. I don't know sadly, because I do believe in a fair market economy. But legally, I do not believe there's anything you can do unless there was something specifically written in the lease that governed the rent increases. In commercial leases, there's often a predetermined rental increase, but in residential leases, rarely is that in there. But it's worth looking at your lease before I say no to that. I guess look at your lease to see if there was renewal acceleration built in, not acceleration, but renewal increases built in to your lease. But it's unlikely with a residential lease that it's in there. So sadly, you may not have any recourse. But again, another reason why buying property, if you can, would make sense, because you're not going to knock on your own door and raise the rent. And I always caution people to not look for government intervention to solve every problem. And I read an article this week that I found was super interesting and startling, but I get why this particular state senator was trying to pass this bill. So this comes out of California, and I know there's a lot of kooky stuff that happens in California, and a lot of the country looks west rather and laughs. But 51% of all residential real estate transactions in the third quarter of 2021, which was the data set that they reviewed, were purchases made by investors. Now, the national average is 19%. So because of that, some of the legislators in California said, hey, let's enact a bill that'll make it harder for investors to buy and flip properties. And right on the surface, I guess it makes sense. Then that would leave the inventory available for the families who are trying to buy a primary residence. And oftentimes rules and decisions are made with the best intentions, but there are other byproducts, if you will, that sometimes have a negative effect on a market. So this bill that they've proposed is a capital gains tax on any property sold within 7 years, any residential property. And that includes you buying your, one and only property. Now, they want to enact a 25% capital gains tax on any property sold within the first 3 years, and then it steps down from 25 to 20 to 15 to 10 to 5, and then after 7 years, there's no capital gains. So on the surface, yeah, that seems like it would make sense, but I doubt that's what's going to happen. What more than likely will happen is those investors are now going to have a 7-year game plan. And institutional investors are most likely the ones that have the horsepower to buy and hold for 7 years. So I believe in my gut, I don't think it's going to pass because I think cooler heads will prevail. And I also do believe this was a well-intentioned rule or proposition. However, if you think about it logically, if you allow or encourage, in this case, institutional money to come in and buy a large portion of the inventory with the intent to rent it for at least 7 years. Now, we all know what's happening with rents, especially in states that don't govern rent increases. You're more than likely going to create a generation of renters because that property can't re-enter the market for that 7-year period of time without suffering a capital gains. And we all know savvy business people, investors, especially institutional money, know how to find a way around the rules and the taxes. And I don't say that in a bad way. That's the smart money. They're in this to make money. So I just think on the surface, they might sound great. Let's discourage investors. But I think you're just encouraging investors to hold the property, taking less inventory off the market, which is going to cause more people only to have the option to rent. So while a $500 a month rental increase is super frustrating and feels criminal, I think we need to let the market shake itself out because sometimes government intervention is not the answer. I guess let me go back to that story about me driving the truck and overcorrecting. That California proposal almost feels like an overcorrection to me that could have some wayward byproducts. So I'm sorry to hear that you're going through that. It may be what you need to encourage you to kind of take a look, that kick in the pants, if you will, to take a look at possibly trying to make a move of your own, because that's another reason why owning property makes sense. So give us a call. I'm happy to walk you through options as a first-time buyer if that is is truly your circumstance, and at least let you know what you could qualify for if you wanted to buy. And lastly, Chris, let me throw this out there. Sometimes we get hung up on waiting for that perfect house, and we miss the perfect opportunity. And the perfect opportunity might not be the big house with a pool. It might be, a 2-bedroom townhouse or a condo that you can, comfortably afford the rent or the mortgage payment on, rather, and avoid paying rent. Hold it for a couple years, sell it, cash out the capital gains in Florida, gains free after 2 years, up to $250,000 if it's your primary, and go buy the house that you really want. Or hold it and rent it, because you know what the rental market's like now. So, it's frustrating. I'm seeing more and more people that are making the call to our office to find out about making that move, because they're fed up with the rental increases and got caught off guard with a big rent increase from their landlord. So, if you have questions, give us a shout. 561-291-8569 is the Anytime hotline. 561-291-8569. Again, that rings to my office during the week, so super happy to walk you through anything. But to answer your question, I don't know that there's a lot you can do if it's not written in your lease. So also, too, don't forget the website, www.mr.mortgage. That's www.mr.mortgage, never a .com, just mr.mortgage. We're going to take a quick break. On the other side of this, we'll dig into some more questions.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes. I'm happy to recommend Mark and his Mr. Mortgage team.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at soflappraisal.com. That's soflappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. soflappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, Mark Eitel here, host of the Mr. Mortgage Show, and as you heard, 561-291-8569 is the Anytime hotline. Dom is standing by and manning that, and happy to answer happy to get your questions to me so I can answer. Actually, Dom probably could answer a lot of these questions. He's been with me long enough to know most of these answers, but he's manning the question line. We also are watching for the incoming emails to www.mr.mortgage. There's a contact us link there too, where you can shoot us your questions. So hopefully, Chris, that answers your question. I'm sure it's not the answer you wanted, but hang in there, my man. I know a lot of people are getting hit with rent increases, so you're not alone. I know that doesn't make it any easier, but when you're ready to have that conversation regarding taking that next step, give us a shout, and I'll find a real estate agent who's happy to work with you too. So anyway, speaking of Dom and questions, I know I see Dom behind the board with another one queued up. So what do we have, Dom?
Speaking of rent going up, my rent just went up too. Yeah. All right, Robin called with this one. We just moved down and paid cash for our house. How long do we have to wait to do a cash out refi? Okay,
that was Robin?
Yes, that was Robin.
Okay, great question, Robin. And then we're going to double back to Dom's rent in a minute. He slipped that in there on us. But so interestingly enough, Robin, that's a wonderful question. And a lot of people are doing what you did, right? They sold a large, more valuable property, cashed out a ton of equity, and relocated and paid cash. And there's a lot of regions in the country that are experiencing that type of buyer. Florida, Arizona, Texas, Tennessee, North Carolina, South Carolina are the primary relo markets with cash buyers. And if you there's an acronym for that, Fat Cat, right? Florida's F, Arizona's A. So the Fat Cat states a lot, and I don't mean that to be derogatory to somebody who has the ability to pay cash, but those states seem to attract the cash buyers. So to answer your question, here's something that's super cool. It's fairly new loan product that was designed specifically to allow you, the cash buyer, to capitalize on the power of cash in this market, yet still access that equity and remove the cash back out of the property without, did you hear me? Drum roll, without having to pay the additional interest rate of a cash out refinance. So oftentimes, because there's a little higher risk associated with a cash out refinance, and it's not me saying this, it's historical data, shows that once somebody pulls a big sum of cash out of the property, it's usually a sign that there may be future stress in that person's financial situation, if you will. So because of that, cash out refis typically have a slightly higher interest rate. This product is called delayed financing. And I know that was a delayed answer because I always have to set it up with a story, but you do not have to wait at all. There's no waiting period required for you to, as a matter of fact, you need to do it within the first 6 months to get the delayed financing option. And basically all that means is you can go through the loan process just as if it was a purchase mortgage and pull the money back out with the same rate in the same term as a purchase mortgage, which, just as I mentioned, is always a slightly lower interest rate, without paying the premium for being treated as a cash out refinance. And you can take one big lump sum check. It's not like the rec loan where we're paying off other debt. If you bought a $500,000 property and you want to pull $400,000 of it back out because you want to put it back in the market, or you want to buy more property, or there's other investment opportunities that you want to capitalize on, the loan product is called delayed financing. It's actually called delayed purchase financing. And there is no waiting period after you purchase your property to start the process for delayed financing. You can actually have the process in work while you're making the cash purchase, so it can happen very quickly. And lastly, I just want to remind you that you have a 6-month window after you close to take advantage of the delayed financing cash out strategy. So hopefully that answered your question. And as Dom mentioned, even his rent's going up, Chris. So everybody is suffering in that particular environment. And you hear me mention that Zumper report all the time. And, 50, I'm doing this from memory. I don't have it in front of me. I want to say 51 or 59% of the landlords surveyed anticipate increasing rent again at this next renewal period. So, and it may be a product of their hands were tied for so long with all of the COVID relief that they're just playing catch up. So I don't know what the I guess what I'm saying is it might not be just the evil fat cat landlord that's trying to push you out of the property. There may be some other circumstances surrounding it, but at very least it gives you an opportunity to look at making a move, maybe to a better place, to a cheaper place, but certainly possibly even making that move to becoming a homeowner. So, Robin, sorry, back to Robin. Yeah, no waiting period. Delayed purchase financing allows you to pull that cash back out without paying the premium for a refinance. So back to more questions. I hope that answered your question, Robin. If you need more details or you have questions regarding that, give me a shout, 561-291-8569, and we can answer that in more detail. So, hey, Dom, do we have